guys. So in this video I'll be explaining a full-fledged problem for the computation of taxable business income from taxable business income. So I will be working out the second problem given in the handout. So let us read the question properly. So given in the question, the net profit as per P&L account is 1,36,000. All the debits, that is expenses and losses, have been given here. And in the next page, the incomes and gains, that is the credits, have been given. As I have told you all earlier, while calculating the taxable business income, we will have to follow a particular format. That is this one, which is being shown. That is net profits as per P&L, add inadmissible expenses, that is expenses which are not allowed in business, less the expenses allowable, less income from other head, and add income which is not considered but which had to be considered under this head. You will arrive at income from business taxable. Now let us read the question. Under the debits, that is expenses and losses, the purchases made during the year were payment made by cross check 60,000. Here, as per income tax rules, payment made by cross check 60,000. Okay, this is an allowable expense. The next one is payment made by bearer check, which was worth 40,000. In this case, as per income tax rules, any payment through bearer check or cash made in excess of 10,000 is not an allowable expense. So this payment made by bearer check worth 40,000 is an inadmissible expense. Hence, you will deduct under inadmissible expenses. That is payment made by bearer check 40,000. The first expense, that is payment made by cross check 60,000, that is a correct one. Proper treatment has been done by the company. Next, moving on, payment made to a relative. The fair market value of goods is 78,000, but you have made a payment of 1,20,000. So when you have received goods from relatives worth 78,000, you have made a payment of 1,20,000. So the excess, that is 1,20,000 minus 78,000, that is 42,000, is an inadmissible expense because it is not a business expense. You have just provided extra money to your relatives, so that is not a business expense. 42,000. Moving on, expenses on advertisement. Neon signboard installed, worth 32,000. So neon signboard is a capital asset. It is of the form furniture and fittings. Hence, capital assets cannot be considered as an expense under P&L. So this has to be deducted it has to be minus it has to be treated as an inadmissible expense. So neon signboard 32,000. Next, moving on, 20 gift items worth 2,500. The total amount is 50,000. So this has been charged as an expense under P&L, and it is the right form of treatment because 20 gift items can be given as an advertisement to improve our business. Next, moving on, advertisement in souvenir of a political party. Any cash or any expense given from the business point of view to a political party for any purpose or for advertisement will be considered inadmissible. That is, it is not allowed. Hence, payment for advertisement in souvenir of a political party 20,000 is an inadmissible expense. Hence, we add back. Next, payment for advertisement made in cash. Any payment made in cash or bearer check in excess of 10,000 is inadmissible. Hence, the 36,000 is added back. It is added back as an inadmissible expense. Later, moving on to the next page. Expenses on travel by employees in India, outside India. So, employees have to travel from one place to another with any business meetings or arrangements. Hence, these expenses have been debited in P&L account, which is the right kind of treatment done by the business. Next, moving on, depreciation on guest house building. The business entity might have any guest house building for clients. Hence, depreciation on guest house building it's considered to be a business expense. So there is no changes required in terms of this depreciation on guest house building or expenses on travel by employees. So you can just ignore it. Expenses on maintenance of guest house. This also applies the same. Guest house might belong to the business entity. Hence, expenses related to the guest house is actually the expenses of the business. Next, moving on, following taxes have been debited. That is income tax of 20,000. Actually, income tax may refer to personal tax paid by the person, or income tax is generally paid at the end of the year. So income tax will not be charged under P&L account. We have actually charged under P&L account because all these expenses comes under the debits. So as per the business records, the company's books of accounts, since income tax has been charged under debits, it's actually wrong. So now it is an inadmissible expense. Income tax paid is charged under inadmissible expense. Next, moving on, advance income tax 40,000. Same thing applies. Advance income tax is also considered as an inadmissible expense, 40,000. Next, moving on, GST due on 31/3/2019 was paid on 1st June 2019 worth 6,000, and on 1/11/2019 worth 45,000. As you all know, the last date of filing return is 31st of July 2018. So any tax paid before this date is considered to be an expense for the business. But this amount of 45,000 was paid on 1st November 2019, which is months after the last date of filing return. Hence, this amount of 45,000 is considered to be inadmissible. Hence, we add this GST paid after filing returns of 45,000 under inadmissible expenses. So you add up all these, and finally you add up this 2,75,000 with the net profit. Later on, minus expenses allowable. So let us see in the question if there are any expenses allowable. You can see there are only debits and credits. There are no adjustments. So when there are no adjustments, you need to see if you have any other logical thing which has to be allowed as an expense. You had bought a neon signboard worth 32,000, and it is also given the question that neon signboard rate of depreciation is 15%. So you need to charge 15% depreciation on the neon signboard. 15% of 32,000 is 4,800. So actually neon signboard belongs to the business, and hence you need to charge depreciation on it. So this is an expense allowable, and because this depreciation wasn't already charged in the P&L account, it wasn't mentioned anywhere that depreciation has already been charged. So we need to charge depreciation, hence it is an allowable expense. Later, moving on, income of other head. You need to see whether there is any income. You can see under credits, profits on sale of export license. So here, profits on sale of export license is some profit which is earned by this person apart from his regular business. So this profit on sale of export license, that is 8,000. So this profit on sale of export license is a profit earned by him as an income from other source. It is not an income from his regular business. And capital gain on sale of shares, that is 20,000, is an income from capital gain, and it is not an income from regular business. So you add up these two under income of other head, that is capital gain on sale of shares 20,000 and profit on sale of export license 8,000. Next, bad debts recovered. Out of this, only 12,000 were allowed earlier, but the whole value is 30,000, which means to say that you had a provision for doubtful debts worth 12,000. You weren't sure that the goods sold worth 12,000 you will receive the money or not, but suddenly you receive 30,000 rupees. So instead of when you were expecting to receive only 12,000 rupees, you have received 30,000 rupees. So the difference between 30,000 and 12,000, that is 18,000, is the excess. So this excess of 18,000 is to be considered that income from other sources. Hence, when it is considered as income from other sources, it directly comes under the head income of other head. So bad debts of 18,000 is to be charged under income of other head. And one more thing which I had missed is local taxes for business premises, 6,000. So this is a business expense because local taxes has to be paid by the business entity so that it is able to run the business daily business activities on a long-term basis. Hence, there is no changes required in case of this, so you can just ignore it. Hence, when you add up all these inadmissible expenses, deduct all this income of other head, and there is actually nothing mentioned as income under this head which is not considered. So when you add and deduct all the amounts, you will receive taxable business income, that is 3,68,200.